is going on, beautiful people? We are live right now. My name is David Worrell. I love to trade. I love everything the market, but primarily our strategy is based around those base and trend breakouts. When the market is in a bull market, that is my play. We follow the market, we follow the leaders, and we ensure that we catch those base and trend breakouts that pay so damn well. Welcome, ladies and gentlemen. We have a NASDAQ gap up, but we have pulled back a little bit. But I've been looking at a lot of different stocks to see how they are acting right now, and the themes are still holding up. So we'll go through all of those very, very soon. Welcome, everyone. Make sure you say hi in the comment section. Yosef, what's going on? Zamora, Beefy, Stu, what's going on, brother? It's good to see everybody. I hope the music sounds good. I hope the mic sounds good. Everything is going just fine. I know we had a beautiful weekend. Got a lot of things done. Holy cow, things are just going not so between work and then working on the side. Goodness gracious, great balls of fire. What's going on, Jolene? Good to see you. I know you're just as busy as I, but I promise you guys, we have a doozy. We are in a bull market. We identified that power trend. We have been making money in the Discord. It's an absolute beautiful thing. It's good to see everybody in here. You want some more volume on the sound, on the music, or on me? Do I need to be louder? Let me know. We're gonna start the show, baby. Let's do this. All right. Let's see here if I can get the sound up a little bit better for you. Let me just take a little look-see here, make sure. All right, we should be good. That should be a little bit better for you. All right, look, guys, we have an awesome show for you tonight. The first thing I want to read to you is a little story from Reminiscence of a Stock Operator, okay? This is a little story inside the big story, and I think it's very important, especially in times like this. The Old Turkey story from Reminiscence of a Stock Operator. In Edwin Lafray's Reminiscence of a Stock Operator, a fictionalized biography of a legendary stock trader, Jesse Livermore, the character of Old Turkey offers a timeless lesson about patience in a long-term investing. Who was Old Turkey? Old Turkey was an experienced old trader who frequently the same brokerage offer as the narrator. He was known for his calm demeanor, his tendency to keep his own counsel, and his surprising success in the market. Old Turkey's approach was strikingly simple. He would pick a stock or commodity, buy it, and hold it. He didn't get caught up in the daily fluctuations or the hot tips of the moment. The iconic line was, when other traders would anxiously ask him for advice, Old Turkey would often respond with a knowingly smile and this simple phrase, you know, it's a bull market. And I think there are so many lessons behind that. There's a few key takeaways in here. You guys should just listen to the book. Every time you listen to it, from new to old trader, you're gonna find out really quick. There are so many lessons in that. As you watch him slowly progress and get better in his trading, you slowly get better and understand more of that beautiful and timeless story. So anyway, another thing I wanted to point out too with this is a little piece of news that B. Stewie put out through Trader View here. The U.S. futures steadily ahead of data-heavy week. So this is just it's showing it's still a bullish sign after everything that is to come, as it holds steady on Monday as investors prepare for a week packed with potential market-moving developments. As you guys know, we like to go over the economic calendar here. So let's just go ahead, instead of reading on the news, we can notify ourselves. We can understand what is the volatility up ahead. And if you look here on the economic calendar for this week, right away you can see Wednesday's a big day with core CPI coming in. We want to know that core CPI, and so does the Fed. Of course, that is going to change our CME Fed Watch tool if it comes in too high or too low than the forecasted expected of 0.3%. So that is the month over month and the year over year. And then of course, Thursday, we have the initial jobless claims data They come out at 8:30 Eastern, so make sure that you are aware of that, because folks, when you're in a stock and you're like, whoa, what's this fluctuation? Oh, what's this? If you can know ahead of time that you're going to see a fluctuation and just understand, you can imagine like, well, if it craters here, is my stop in, because it's at 8:30, it's in the pre-market. So it's going to scare you to see volatility right before the open. It also increases better trading odds. Maybe if it gaps back down to that breakout area, like Swolzenberg and I were talking about. I hope you're here listening, Swolzenberg. Because this is the only way to learn, right? You got to learn. If you want to learn from the strategy, you got to focus on people that are willing to teach it. And hello, here I am, folks. So we're going to keep looking at all of those. What's up? Torqued in the building. He even used the word, folks. Norman Conklin, what's going on, brother? It's good to see you. We have a lot going on this week, and amongst all of the news, all of the drama going on in the market's still holding high, and I love to see where it is at. So keep in mind, on Wednesday and Thursday, the 8:30 pre-market, we're going to see core CPI data on Wednesday, initial jobless claims on Thursday. Now, one thing we've been looking at this for quite some time. Joseph brought this up, and I thought it was very interesting, and that is the overall social sentiment. So what are we seeing here? Well, when we were at an all-time low, the social sentiment was extremely bearish, and that is when we started to take note of the social sentiment being so damn bearish. Well, when we're that damn bearish, well, we're bound to have a retracement or a retracement to the mean. That rubber band snapped, and here we are at the highs and trying to hold these highs steadily. We're not smacking into resistance and pulling back hard. We're smacking into resistance, pulling back, and finding new higher lows. So we can see the social sentiment is still further on the bearish side, which is a good sign if you are on the bullish side, because it's not going to work if everybody's on the bullish side. They're going to sell into that, right? They're going to wait until the big guys, when I say they, I'm talking about the giants, the shoulders that we want to stand behind or stand on, whatever the hell the phrase goes. We want to be a part of that trend. So if we have people trying to short this market, they're going to have to cover. We're going to see a steady rise and fall of these shares, liquidity pouring into this. And as long as we're seeing that liquidity come in and we're seeing new higher lows, we're seeing liquidity in a positive direction. Of course, we did see a nice sell-off on, I think it was Thursday, and it was, people were very bearish, but it's just so funny to see because we were still well above a 21-day moving average, I believe even above a 10-day moving average, but we'll go into that very, very soon. Of course, the first guy we love to talk about is old Mr. Papa Powell. So let's see if any of the previous news has changed in the sentiment of the CME Fed tool. Interest rates with Jerome Powell.
Oh, yeah.
All right, guys, so bada bing, bada boom. For June, 99% chance a rate stay. That's a big change right there because we don't have even the slightest smidgen or a schmeckle of a bit in order to have a rate cut in June. So let's check out July, and now we're starting to see a very small possibility. Still no bueno. September now? Well, it looks like September, we are starting to see that rate cut get priced in. So we are starting to see a little bit of a change there. Right there is our one cut, our possible 1/4 of a basis point cut. Let's go to October now, and you can see here we have that possibility still lingering and jumping to December. You can see we have still a big possibility that, an overall possibility that we will have 2 rate cuts. So those 3 have now been completely priced out almost. I would say almost completely priced out. Obviously 21% chance, but 2 rate cuts. 2 rate cuts in the mist there. So be very careful. What's up, Mama? Good to see you. And Libby Franchuk, good to see you. She says hi all. It's good to see everyone. Mama, let's go. All right, so that is our CME Fed tool. 2 rate cuts expected by the end of the year. We got a long ways to go, and as long as that doesn't change, it looks like the market has already priced it in. Right here is your NASDAQ. We're gonna go over the overall NASDAQ and all of your components of that NASDAQ. So let's just give that a little look-see.
This is your ETF and S&P 500 review.
All right, so it's pretty simple, guys. NASDAQ creating new higher lows and holding this 10-day moving average trend. Ever since we had this V-shaped bottom here, if we just use our 10-day moving average as a guide, you can see here we have held this trend. Not one time have we closed below this 10-day moving average. So that's a beautiful sign because we want to hold above a 21-day moving average. That is our biggest tall tale. After 10 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We identified a power trend. That power trend led to more bullish sentiment. And then smacking into this resistance up here, instead of smacking into resistance and failing, we smacked into it, held by the 21-day moving average, came back up, traded sideways, followed the 10-day, and now look at, we're pressing in on that $22,000 area in the NASDAQ futures. It's a beautiful sign because we don't want to just smack into this and just fail. If we smack into this and just fail, then I would expect the next push up higher, wherever that bounce would be, to sell off as well, because we're going to see continuous liquidation of, you know, the bigger assets. But here we're seeing it actually hold, and as it pulls down, we're holding a trend. Now, can it pull back? Yes, it absolutely can. If you see the anchored VWAP from the all-time high, you can see we can come as low as this 200-day moving average and still be okay. But when I say okay, that doesn't mean I'm trading down here. I'm waiting. Okay, so right now we're holding the 10 and 21-day moving average. I am still extremely bullish until I'm not. When I am not is when we are below the 21-day moving average on this NASDAQ futures or the S&P 500. And if we look at the S&P 500, it's looking clearly the same, a little bit stronger here. Of course, we're not seeing the open for the next day. But let's take a look at Bitcoin to see how that's holding up, as it is running right into its trend line, but still all above all of its moving averages. But the most beautiful indicator on this is that 50-day moving average as it squatted down on it. So it's showing relative strength on that 50-day moving average as it's pulled back and now bounced off of it again. So if this thing can hold somewhere in this area, get tight and break out of here, I think we can see that $110,000 area breaking as a basing breakout. Now, I can assure you my best case scenarios aren't always going to work out as planned. As you guys can see here, I expected it to trade sideways into this resistance area for a little bit before breaking out. Just like I would assume if this was a proper basing breakout, it would now get tight here, come up, make a new higher low. And if we have a longer basing process in this area, let's say around September or October, give this thing a lot of time for the bigger guys to get in and paint the picture. And then on that breakout is where I would want to get into something like an MSTR or a vehicle of whatever your choice is, BTC or IBIT, you know, whatever vehicle you're willing to use to risk that capital and find proper risk reward. So keep an eye on Bitcoin. This isn't something I'm looking at playing right now. I'm waiting for tighter action up here at this base around that $109,000, $110,000, but definitely one we want to keep an eye on. Small caps, of course, we have been lagging for quite some time, but right now breaking out of this basing area and just popping right up into this area, still below a 200-day moving average, so not much to talk about there. QQQ, you guys know that this is the tech-heavy industry, and it's been leading the market. It's doing very, very well. The Dow Jones Industrial, I believe this is struggling here, but this is the basing area that we want to get above. At least above a 200-day moving average, that's a good sign, but it wants to push higher. And if it can push up and out of this and get back up to these new all-time highs and then maybe pull back and consolidate for a little bit, that would be best case scenario. What up, Loke? Good to see you. So let's take a look at the overall sectors here. We already looked at the XLK. Consumer discretionary above a 200. XRT, which is retail, now above a 200-day moving average. IGV, so this is the tech software sector given to us by Torque. This is very, very nice. I'm sorry, this might be Torque or B Stewie. Either way, guys, when you look at this IGV, this is beautiful. V-shaped bottom, smacks into this trend line, and then it gets tighter, new higher low, and then breaks out right here. So this thing could be moving higher much faster very soon. So keep an eye on those tech softwares, or just play this if you want. but you're gonna have to risk a lot more capital for a slower mover. This is the regional banking. This is mid-regional banking, I do believe, below a 200-day moving average. XBI, this is your biotech. Now, this is finally starting to turn around. Now, you guys, if you're going through my watch list or my screener, yeah, I seen a ton. Now, I only took a couple, and you guys are gonna see my watch list is gonna be a little different. You're gonna say, oh, you got a few shit tickers on there. I do, but I think I'm just gonna keep a close eye on these and risk much smaller. But my capital is being preserved on my A++ setups. The second I start dabbling into those shit stocks, I always regret it. But I do want to always be focused as a technical trader because I think that is most important, and then the fundamentals follow, at least for me. So anyway, biotech is starting to shape up here, getting above its quicker moving averages, but you can see here, it's well below this 200-day moving average, and it's declining. So it's not something I trust my money in when we have so many other great runners, great leading stocks. So I'm trying to stay away from healthcare, biotech, and pharmaceuticals. This is our real estate. You can see it's starting to tighten up here right under the 200-day moving average. That's a good sign. XLB materials just below that 200-day moving average. Healthcare, like we just talked about, absolute dog shit. This thing here is not doing very well at all. It is probably one of the worst sectors that you're going to see out there. So we're not going to sit around for too long. The breadth in the market, I heard so many different things about breadth. I like to take a look at it just to kind of get a better understanding of the S&P 500 if it were equally weighted. Because if it's above a 200 and it looks like it's going to break out, we might start to see sector rotation. And if you don't really understand what that means, when we look at the hot sectors, like if we look at technology, if we look at software, quantum computing, AI, nuclear, cybersecurity, aerospace, all the hot sectors, when you talk about them, well, what happens when one of the sectors start to cool off? Well, when one of the sectors or maybe another sector starts to get important to one of these bigwigs, right? And they start to reduce shares in certain areas to put more money into other shares that they think they can capitalize more money on, right? So with that being said, we want to see that rotation. We want to be there first. And with this here getting ready to break out, are the same sectors going to continue to lead? Or are we going to start to see some rotation into something else? And if we do, we want to be first to know. Next is going to be industrial. So this is XLI, industrial. You can see it is doing very well, making new all-time highs well above the 200-day moving average. This is a leading sector right now, XLI is. MDY, this is the mid-cap spider, so this is below a 200-day moving average. XLE, energy, 200-day moving average, well below it, doing absolute garbage, just like healthcare. So if you're looking at the traditional XLE and its sectors, it is not doing so hot. The oil and gas, again, not doing so hot. Subsector though, nuclear, uranium. If you guys take a look at this beautiful, beautiful chart of nuclear, look at my best case scenario. After we have this huge pop up here and everyone's excited and euphoric about nuclear, your SMRs, your NNEs, which we're gonna take a look at those very, very soon. It had a big pop up here. Now look at, we put our best case scenario right here, and it's starting to follow it, starting to tighten up now, getting very tight here. And so I think it's very important that you keep an eye on this sector because I think it is going to continue to lead as it broke out here and showed that this is very, very important. You need to keep your eye on that. Same thing, aerospace and defense, straight freaking up here, guys. So if you got aerospace and defense stocks on your line that you think that you can find proper risk management in, this thing eventually has to cool off. It will have to cool off, find proper risk reward, because this is leading the overall market. Absolutely beautiful. I want to take a look at gold. So I called the top in gold here, guys. Now, I'm not saying the top can't be broken. I'm not saying it's a top forever, but I'm saying when we've seen this capitulate here, I'm very, very good at calling those capitulating tops. We had all these gapping areas here, big volume, big gapping areas, just starting to look really sloppy here. So when we had this, I just said, I'm thinking that this is the top, and we started to see this trend. and it pops back up into this trend and it's getting pushed back off. I could definitely see gold cooling off for a while, but I've been wrong on gold before, and I could be wrong on gold again. I'm not playing it. I don't have any money in it. I'm just watching the ETFs, guys, and I'm just noting what is going on. But if something does set up, I do have some gold stocks online, like ORLA. We've played multiple times, basing breakouts and stuff like that, because it moves a little faster. I think it's like a 6.4 ADR. KIE, this is the insurance companies, guys. They were very hot. They were leading the market for a while. You can see all this gibberish that I put on here. You can see the big pop down. Wasn't interested below a 200-day moving average, but now it's getting tight again. It's getting tight again. Your stocks like Root, your stocks like Bro. Yeah, look at right here, guys. Stocks like Bro, these are starting to set up again. So keep a close eye on that. Bro, not so much, but definitely Root. And we have one other leader we'll take a look at a little later. XLU, this is utilities. Nice push up higher, pulling back, adding as a bounce off of its support area. So looking good, looks like it's still strong. XLF, this is the financials, still leading the way, still doing very, very well. XLP looks like consolidating above the 200-day moving average, not looking bad. That's consumer staples. And communication, guys, do not sleep on communication. It's kicking ass, it's taking names, it's looking very, very good. Lokedoc says watching MNMD and CYBN for psych. Yeah, that's one that I do not have a good watch list on, is psych drugs. Now, I know B-Stewie's got a good psych drugs, but yeah, MNMD, MindMed, I believe that is. We could take a look at that a little later. One last ETF before we carry on here is gonna be Hack. Now, I've been talking about cybersecurity for a long time. We have a whole list of cybersecurity stocks. I've been playing RBRK for a while. We played CrowdStrike right before earnings. We've been making money on both. But Hack is just leading the market with the rest of it. Extremely strong, absolutely love it. These sectors, the hot sectors, are still intact. And I'm really still extremely bullish on the overall market itself, okay? Now, I'm gonna use my Thinkorswim on this just to give you better market data here. Let me get rid of that. And let me just go ahead and show you guys a few that I have on my list here. Oh, actually, no. There's a few last things I wanna go over. And by the way, we gotta get that Trader Lion book. I'm jealous that you guys have that. I see it's got all the stock charts in there with all the annotations. Definitely getting that book. Definitely gotta get that book. Okay, this is a little segment I like to call the beefiest of stews. He's been doing some charting, he's been doing some trading. Let's check in on my boy, the beefiest of stews.
Oh, I see you over there. You got problems? We've got the beef.
I'm telling you, some of these pictures, man, it's hilarious, dude. Like, DJT, guys, I know, you guys know just as well as I do, it's an absolute dog shit company. He's probably just bleeding the hell out of the American dollars by selling off into this. I don't really care. I don't really know. I don't really care. But you can see on this, if you zoom all the way out, B-Stewie has pointed out very clearly, we have this humongous basing at $11.95. This $12 area here, extremely strong. It just won't break below that $12 area. I think if it does break below that $12 area, you got a great shorting opportunity, unless it does a beautiful undercut and rally. Now, this thing you guys can see right here, the quarterly, it's not making any money. It's not doing well. I haven't even thought about signing up for anything like that. I mean, it's just kind of silly, to be quite honest. Trump media, silly. But regardless of what you think of it, the technical analysis on it shows very clear that we have an area where it's going to pivot. Whether it's going to pivot up or it's going to pivot down, we don't know, but it will show proper risk management in this area. It'll show you two areas that you'll be able to risk off of. So if you're into things like this, B-Stewie's laid it all out for you, including the anchored VWAP over here at the all-time high, which is also notably one of the biggest volume trading days to ever hit the market, as DJT anchored VWAP had shown right here multiple times. When it gets into that anchored VWAP, it fails. So if it can finally get into that anchored VWAP and break out, that would be a good sign for DJT. So keep a close eye on that. And then of course, Tesla, this was done on June 6th, so on Friday, and you can see what happened to Tesla. I'm sure you guys have already seen it, heard about it, whatever. It is on its anchored VWAP, so that's a great sign. But with the overall news and everything going on, this isn't my kind of trade. This might be yours. But this anchored VWAP from, you know, the lows and the earnings, the low of day, or low of the year, looking absolutely scrumptious for a bounce right there. So like that, absolutely like that. Oh, and look at this, BBAI. I actually have this on my watch list. And let's just see what he's got for the anchored VWAP. Look at this, guys. Anchored VWAP. It looks like it's holding right on top of that. And I actually have quite the analysis myself on this, but it's nice to see this anchored VWAP and to see my boy B Stewie is seeing this beautiful trend break as well, and this ascending trend. So very nice to see. And plenty of other things on his charting. Lots of technical analysis. Go check out the old beefiest of stews. I will go ahead and put a link for you right now. If you haven't already, go see my boy, the beefiest of stews. All right, guys, let's see. What do we got? Okay, let's do this. I'm gonna give you guys the watch list for June right now. So what I love about this watch list is it's different, it's more organized, and I think you guys are gonna like it because I know a lot of you guys are talking about these stocks, and a lot of them are starting to set up now. You know, sometimes things can get very, very euphoric and can get very, very exciting. And they are right now. I can tell you that because a lot of things have gapped up, and we can start with QUBT. If we look at this on the daily time frame, you can see this is a beautiful chart here as it broke this trend line. It started to follow the 21-day moving average very beautifully and setting up a beautiful basing breakout here. Why is it so interesting, right meow? Well, look at this. Right there is my alert at the basing breakout, and right here it is at the basing breakout. So does it break out in the morning? I do not know, but it might be a good area for an opening range breakout. It's not one that I'm gonna take. My money is tied up in Hood. Hood right now, let's take a little look. See, you can see a huge sell-off into the close. Actually, right after the close, we had news that came out on Hood that they weren't gonna be added into the S&P 500. It's not that they were not good enough to get in, it's just that there were no changes being made to the S&P 500. So the rumor that everybody had was denied by the people who do the those ETFs, okay? So now we get a nice bounce off of this area of support, but it is just lingering around like some bad breath around it. I don't like the sound of that. I don't like the look of that at all. I don't like all this extra volatility. I'm gonna wanna see this hold this area and start to head back up higher. My stop is right here at 66.30. My entry, I'm gonna start just leaving my entries on here so everybody knows. I took 500 shares at 66.58. So right here, you guys can see I took this. I'll just mark it in green, 66.58. Just so it's very clear. You know, I hate these gurus out there that are trying to make these fake trades and shit. You see it all the time. I'm really sick of it. So I'll just put everything on here. You can see the tags. You can see how many shares I'm taking. You can see, you know, whatever. So my stop loss is at break even on this trade. I cannot lose money on this trade, but I will say this, the volatility and the amount of shares that I have in this trade compared to my account is quite immense. So I did take a big boy share size on this, and I'm expecting it to take off higher. Why did I take it? Basing breakout, baby, just like always. Basing breakout is what pays me money. If it doesn't pay me money, I take very small losses because I am risking low of day. Let's take a look at NNE. NNE is one of the nuclear favorites that we've had in this stock room just because we played this trend breakout right here way back in the dizzy, back all the way back 6/13 of what was that, 2023. So absolutely beautiful to see. No, that was 2024, sorry. Wasn't that long ago. Beautiful to see, and we've been watching it ever since. At least I know B. Stewie has had his very, very close eye on this. What is interesting here is this is an enormous yearly breakout setting up. So if you can see here, every time we got into this 40, 50 area, we sell off. And now every time we sell off, we create new higher lows. Well, maybe not right here, but new higher low, new higher low. We are creating those new higher lows right now. And if it breaks this $35 area, I could think that this would be a very interesting area for a breakout, since it's hit this $35, $33, $35 area so many times. If we get a breakout right there on volume, I could definitely see NNE really taking off. Another important one we need to keep an eye on is Rocket Lab. It is breaking out right now. So congratulations if you already took the previous basing breakout on this. I like to wait for the all-time high for the blue skies, but if you got a piece of this, congratulations. Right now it's sitting at 30.71, so it's a great sign if you're an RKLB, as it is gapping up right above. Oh, it's just within spitting distance, about $3 away, guys, from that all-time high. So congratulations to you if you're holding that. Of course, Archer, that name's been getting thrown around quite a bit, and for good reason, as it is in the leading sector, which is the aerospace and defense. So if you're looking at aerospace and defense, don't sleep on ACHR, as it is a faster mover at 7.6% average daily range, and it looks like it's setting up a beautiful trend breakout here. So an opening range breakout on this, if we see volume come in, would be beautiful for in the morning. So something you might want to keep an eye on. But of course, make sure you're looking at the financials, you know, of ACHR. So that way you just get a better understanding of what you're dealing with here. We're starting to see some EPS change here, and we're not seeing any sales growth. So, you know, things that aren't selling, that's what I think drives a company. I know I sound like, you know, Marty Chargin, but it's true. It's true. What drives growth is sales growth. You got to sell. You got to sell. So if we don't see sales growth, you know, it makes me a little bit more nervous. But there are other aerospace things that are out there. I just like this one because it's a faster mover. We also have Jobby as well, also gapping up and breaking that basing breakout area. So what do I mean by that? Well, you can see this is the basing breakout area. It's came and retested that, creating a new higher low, now following a 10-day moving average. Now look at this gap up in the after hours and pre-market. We're up 17.61% on a stock that moves 5.1% in the pre-market. So sell-off quite possibly, but then maybe what happens is we start to make a new higher low and the breakout comes sometime this week. So keep a very close eye on Jobby as we are breaking out of this area, but because it's in the pre-market and the aftermarket, you know, the volume's absolute dog doo-doo, so we got to wait until the pre-market to see, you know, in the morning to see really where we are at. SOUN, yes, absolute garbage of a company, but it's something that you might want to keep an eye on. I like this setup. I really do. You know, this same damn setup is just like NNE back here. Keep an eye on that daily. We go to NNE, we come over here. Look at this. You know, same setup right here. You can see this right here. We draw a simple trend line. It creates these lows, creates new higher lows, and it breaks out. Well, we head right back on over here to SOUN. We create the trend line, simple as that. Now look what we see here, right? Look what we see. It's starting to get new higher lows. It's tightening range. And now look, folks, look at this. On the daily time frame, if it breaks out above this, you can risk the previous day's low. Now your risk is very small from the possibility of new all-time highs. Sure, but what we're expecting is 20%. If we can get 20% out of this trade, which is, oh my gosh, 20% is right here. It's 1222, you know? That's absolutely beautiful. The next area of major resistance is going to be at 1632. That's 62%. That's 62% on this trade. Now, it's a faster mover, so be careful out there. I'm not telling you how to trade. I'm not telling you what to buy or what to sell. This is just things that I'm looking at. Look at the previous time that this thing moved. We just zoom in on this. You can see I already had drawn that same trend line. It's looking exactly the same. History does repeat itself, or at least sometimes it rhymes. We'll see if S-O-U-N, pun intended, maybe it does rhyme. Maybe it does have the same quite similar sound. BBAI, this is exactly what B. Stewie was charting out for us. As you can see, the trend line from the top. What I am more interested right here is this basing breakout right here at this 467 area. So this has been talked about quite often. BBAI, if you're into those quick movers, this thing moves 11.1%. It's a rip your face off, make or break your account. So make sure you know what the hell you're doing if you're playing something like this. And from what I'm seeing here, the liquidity in this looks dog shit. So let's take a look at how much average volume is coming in on this. Well, we got 89 million shares, so I retract that statement. But do keep in mind the EPS and sales growth. It's a bit wonky. You know, we're not seeing green across the board. It's a bit wonky, so just keep your eye on that. It's something that definitely could make happen, and I think you should have it on your watch list. At least watch the movement. Watch the movement. Another one that's going to be HIMS. So if you guys are watching HIMS, it's definitely setting up again as it's creating this tightening range once again. So right here in this area, oh my goodness gracious. If HIMS starts breaking out at 57, I think that's just getting really tight, really tight. So I like it. I like it. If it has a nice basing breakout, we're going to see this thing continue higher. And I think HIMS is a huge leader in this market. So keep an eye on HIMS. That is in the healthcare, which is very interesting because, you know, HIMS isn't big enough to obviously bring up that sector, nor is it probably even in that sector. But the fact that HIMS is set up to expand after this contraction, expansion, contraction, expansion. Will it go higher? I do not know for absolute certain, but we do have proper risk management in HIMS. So if we can take it and risk small, risk these lows, have a stop loss, then we can make big money. Here's a few that you haven't heard of. ACAD, this is a pharmaceutical. Yes, I told you I had a little bit of everything on here, even though pharmaceuticals look like dog shit. I do like this technical look right here. It almost looks like they got bought out, but if this is the true tight, and it's not because of a buyout, and it's because of these beautiful earnings down here, you can see this thing start to break out higher. So it's just something I'm keeping an eye on. A lot of overhead resistance, not my favorite, but I wanted to give you a pharmaceutical to look at. OKLO's looking really good. I think this thing is starting to get really tight right here. Another possible breakout, another one in the hot sectors. So if you're watching OKLO, I think that that is a smart thing to do. CRMD. So look at this beautiful basing breakout right here, folks. Oh my gosh. I think B. Stewie is watching this for quite some time. This is textbook right here. This thing just shows the double top right here. It sells off, comes right back up, and instead of smacking into this thing and selling off, just like I was talking to you about many other stocks, smacking into it and it holds. Not only holds, but it gets extremely tight, and now it broke out on higher volume. That's what you want to see, folks. And for some of you that are still questioning the volume, if this was your day that you were going to buy, it would be right here. It's a very tall tail sign. I'm just going to pull since last Tuesday, so a couple of weeks here. And if we look at the overall volume right here in this volume, you can see the day that it broke out of its base, you can see the volume right here as it breaks out is significantly higher here. And I have so many damn examples of this. It's unreal. So was I here for this? No, I didn't even have this on my watch list at the time, but now it is breaking out and I need to watch it. I want to watch how it moves. I want to see if it sets up again, because this is a huge base, folks. This is from 10/23 till now. So it's like 6 to 8 month base right here. This is where the big money is made. This is where you put your money in, you puff your chest out like old turkey, and you go big. You risk the low. Look at this. If you would have taken it on the basing breakout and risked the low, you would already be up 1R right now on this trade. In one day, you'd be up 1R, risking this area right here. This thing moves 4%. It's a little bit slower over mover than I like to see, but regardless, this is a beautiful basing breakout. Keep this on your watch list and study this chart, folks. Look at, are you going to take it right here? No, there's not enough volume. Right here? No, it's no higher than any other day. But then all of a sudden we see this and it hits this area and we look and it's like, whoa, holy shit. Look at all this volume compared to previous day. Just look at the previous day. This is a dead freaking giveaway. Okay? Go back and listen to this 1,000 damn times. You want to see how a basing breakout works? You want to see proper technicals? Look at how long this base is. Look how tight this base gets. The day it breaks out on the base, boom, bada bing, baby. Look at beautiful volume comes in to show you, hey, we want to be noticed, okay? Now, does this continue here? I have no idea. Maybe it fails tomorrow. Nobody really knows, and if you got somebody that's telling you that they know for a fact, all I'm saying is, if the boot fits, right now it's working. As long as you can find the proper risk management, which right here would have been a perfect trade, CRMD is looking amazing. And I also want to, let's just dive a little bit deeper in CRMD. Let's take a little peeky gander at it here. Beef Stewie says Sound Weekly looks, oh yeah, Sound and WKEY. Yeah, I looked at WKEY. I didn't put that on my stock watch list just because, man, I don't want to put too many garbage financials on there. But that one just didn't look too good to me, if I remember right. So here's the crazy thing. CRMD is a biotech. So even knowing it's a biotech, you got to hand it over to the technical analysis. It's looking really good. They do have EPS growth, but whoa, look at that sales growth. Negative 100% every year. Goodness gracious. But it looks like they're trying to make new higher highs on their earnings. But however they're doing it, and it's looking really good here. I'd have to dive deeper into the financials. I just do a quick skim over on this to see if they're actually making money, and it looks like they're starting to. So that's a good sign. Maybe maybe read a little bit into their drug. But regardless, biotech's looking dog shit. CRMD. If biotech starts to turn around, CRMD is leading this space. So definitely just keep this on your watch list. Excuse me. ASPI, look at this beautiful thing. Let's take a look at it on the charting. ASPI, let's take a look at this. All right, look at huge cup right here. Huge cup, beautiful breakout of that area. Now a bigger cup. Now we don't call this a cup because I'm sure this is more than that 30%. I can just do this for you really quick. Yeah, it's 58%. It needs to be within that 30%. And you can see this is a 58%, but this is a new all-time high blue skies kind of breakout right here. So this thing could potentially go higher. I have this on my watch list because I really think that if this gives us another chance, like base is out right in this area, I think that this might be really nice as a tightening range and a breakout. We are starting to see some EPS and sales growth, so it makes me a little bit more interested. And if this company can start to turn around, start to make some more money, that would be better. But right now it's not on the top of my watch list. Of course, we got to look at PLTR as this basing breakout looks beautiful. Now, the basing breakout is only about a month. You can't really consider all of this because, I mean, I guess you could say this, but this really is more notable right here. So this is more of a month basing area. It's looking really good. It's looking strong. We had a bit of a gap up and then it sold back off and just trading sideways at 128 right now. But I like it. And I have my alert set at 132. If I see volume start to come in, just like we seen on the last stock on CRMD, if I see that volume come in on the 5-minute time frame, you better believe your ass I will be back in PLTR. But we closed below a 21-day moving average. I was out. I actually believe my stop loss closed me out a little bit higher than I anticipated because I put it under this low here. I figured if we broke that, and it just stopped me out. So no big deal. But we made a little bit of money. I mean, it was chump change, probably like, $5 or $10, but green trade overall. OUST, I know you guys have been chatting about this for quite some time in the chat room. I don't like the way this thing looks. It just needs to tighten up in this basing breakout area, so I'm just keeping an eye on it. Of course, we need to watch. If you're into semiconductors, which I know Jimmy is, which Jimmy is not with us right now, so now I'm kind of worried because Jimmy has been here for every damn show out there. Also, Carl Burr. We need to reach out to these people. I hope they're okay. AEVA, we called the basing breakout right here in the chat room. We took it. We made a little bit of money. We sold it before earnings. You guys can see this thing is just absolutely rampant. I believe it's 178% from that basing breakout area. Look at this, beautiful, 173% move. And if you zoom in here, you see the basing breakout day was 5-2. If we go to 5-2 on here, excuse me, let's go to 5-2 really quick. All right, right here is 5-2, and right here is stamped exactly where I bought this trade. So let's just do a little bit of a deeper dive so we can understand buying this basing breakout and have a better understanding of the volume analysis. So we can see right here, here's the basing top that I identified, right? The basing top here. Now, when this basing top starts to get a tightening range, creating new higher lows, you can see I buy right here. Why did I buy right here at $7.53? Well, the very clear tall tale is if we zoom out and we do some volume analysis and we look at the previous day, look at, I just draw a line to the average. Look at this day. Look at this damn volume midday, not in the open, not at the close, but midday, swelling up with volume here. And then, of course, the actual breakout comes when everybody starts to buy in. You can see all this extra added volume here. And then bada bing, bada boom, this thing takes off. We were up quite a bit. I had a little bit of a fumble here as I sold at 15.78%. I was up on this in just a couple of days. I decided to sell because I knew earnings was around the corner. Little did I know, I should have held for a couple more days because earnings only brought this stock up from where I sold it before earnings. It brought it up another 62%. Now, I was only holding 200 shares, so psychologically, I just thought, you know, I don't really care. It's only 200 shares. But you see where that got me? You see where that got me on that psychological? You usually think, well, don't overbuy, don't over this, don't over that. Well, we weren't in the best market conditions, so I wasn't really loading up on anything, but still, the psychology behind the trade was, well, it's not too many shares, I'm up 15%, I'm just gonna take the whole trade off. When in actuality, I should have said, well, this is an easy trade. I'll just sell 100 shares and hold on to the last 100. I'd be up another, you know, 500 bucks. I would have been able to hold into the earnings. So technically I would have been up much more. If I would have just held on to that last 100 shares, we would have been up probably another 400 or 500 bucks on that last half, you know? So just something that I'm kind of going in the back of my mind with because, you know, I always want to get better. You're a loser unless you're learning, and I truly mean that. SITM and semiconductors, let's take a look. Let me back out of here. Oops. There we go. Oh, look how nice and tight that's getting. So let's look at the financials, just a really quick overview of SITM on the financials. If I just do a quick overlook of the semiconductors, you can see here EPS and sales growth, absolutely beautiful. I'm gonna put this on my watch list as well, so thank you for that. SITM. As these semiconductors are really starting to turn heads, these smaller cap semiconductors. We also have FROG. Well, I guess I should give SITM a little bit more news here. 4.8 billion market cap. The average volume is only 253,000 though. So do keep that in mind. You want to see huge volume on this breakout. Huge volume. You want to see hundreds of thousands of volume on that 5-minute candle is what you want to see, so that way you know it's institutional ownership buying it up. I doubt a lot of institutions are holding this stock, but we can do deeper dives into that very, very soon. So that's SITM, thank you for that. We also have Frog. You guys know I absolutely love these cybersecurity, and this Frog, guys, don't give up on Frog just yet. You know, it was funny, and I hope Torque is listening right now because, oh, Jimmy is here? Of course Jimmy's here. Jolene says Oust is her best trade right now. Let me just go back to, I just typed in ouch, O-U-S-T. Let's just go back because I know for a fact, because I was talking to you about it, you played this trend breakout, which is absolutely beautiful. You're kicking ass, you're taking names. Love to see it. What I like mostly is the basing breakout. Oh no, I think you said you took the basing breakout, didn't you? I think you said you did. I'm sorry, I can't keep everybody's trades in line, but I tell you what, I know a lot of us trade similar, absolutely beautiful to see. And I'm really, really happy for you. I love seeing people come in here and they're making money, they're kicking ass, they're taking their own trades, they're watching their own stocks, and they're just making money. So let's freaking do it, guys. Back to Frog. We can't give up on Frog. And if you were with us in the Discord, Torque actually talked about how Frog just looks too clean. It's too clean. Well, we had the rally, the fake out, and then we have the shakeout, and now we have the tightening range. We both were talking about the fake out, the shakeout. We talked about all of it. Now we have a tightening range. It's still squatting on a 10-day moving average. If this thing breaks out of this $44 area on that volume, okay, on that volume, just like we're seeing it break out on the volume, it's retesting this area though. But if it can break out again on this volume and continue to hold new higher lows, then what I want to see is me get in for a sizable amount, risking the low of day for an expected move much, much higher on this stock. Why am I so excited about FROG? Well, because it already had all of that shakeout, bake out, all that BS. We have EPS and sales growth in this thing, and it's looking really, really good. We also have a little over 1 million shares in volume being traded every day on this. So if it can break out of this area, I could see Frog leaping much, much higher. All right. I got a couple more I want to go over here, and let's see. I do have NVST, B. Stewie. We're gonna get to there. Jolene, absolutely, yeah. I'm almost to it. Actually, we gotta look at T. What is this? I don't know. I think it was supposed to be TEM, right? Tempest. Yeah, that's it. So Tempest looks really, really good. I know you guys have been talking about this for a while, but look at this beautiful, beautiful. So this is its IPO right here, and it's getting really, really tight on this. I mean, I could see this thing breaking out, you know, tomorrow possibly. So keep an eye on that as we had the volume contraction pattern happening. We're starting to see a little bit of volume start to cook up right here. I'd like to see this thing break out on volume. I think this thing can go much, much higher. OLO, this is another one I have on here. This isn't the best ticker, but look at the technical analysis on this bad baby. I know B. Stewie has been charting this one as well for quite some time. Absolutely beautiful. This trend breakout looks absolutely amazing, but I'm not seeing enough volume to want to take it yet. So maybe the volume shows up tomorrow. Keep an eye on that. BKSY is another one. Another technology stock looking like it's getting ready to break out. And here's your beloved NVST, a beautiful breakout here after its volume. You can see it's getting really, really tight, holding out of that 10-day, creating new higher lows. So I see 3 new higher lows here. Yeah, I like that. I like that a lot. Let's look at the hourly, and then we're going to go a little bit deeper into this. So if we look at the hourly, guys, I mean, it's just being painted so beautifully. I like the looks of it. We'll just do that. That looks nice. That looks nice. It's getting so tight. It's getting so tight. Yeah, I like it, guys. I like it a lot. Thank you for that. I got my alert set here. There's gonna be multiple alerts on this. You know, you wanna get alerts. If you get 2 alerts, you know that now's the time to probably look for volume. You got 1 alert down here saying, hey, this thing is getting very close to where you need to be watching. So make sure you're, you know, in a good spot on a project, set the hammer down, get the phone out, you know, make sure that if the volume starts to come in, you're ready to buy. So NVST is looking really, really good. Of course, these are my thoughts. They're not yours, guys. I'm not telling you what to buy. I'm not telling you when to buy. That's all up to you. But we have a few things that we are in control of, and that's how much we are willing to buy, where our risk is, right? And where we're going to take our profit. So keep that in mind. NVST looks like it's setting up proper risk reward. I'm glad you guys are watching this one as well. NXT. This is another one that B. Stewie alerted me to. This is Next Tracker. I know nothing about the stock, but NXT, if we look at the overall financials, you can see they are actually making moves with EPS and sales growth. So I like the sound of that. And then, of course, this tightening range, it looks like it's starting to break out right here. Mini basing breakout right here at this $58, $59 area. Maybe the psychological 60 area gets broken out. But we're just seeing a lot of really, really good things go on out there. A lot of really good setups. This is your electronic and technology equipment and instruments. Yeah, Torque likes this one too. NEXT or NVST? Let me know. Let's take a look here. Oh yeah, GRND. So your boy Carl Burr, I wish he was here with us right meow, but he took this one. He's been making quite a bit of money on it. And look at this, it's starting to base out once more. So if you're interested in this kind of stock, it does have nice EPS and sales growth. I don't know how they're making so much damn money. You know, the gays got to go somewhere to find people too, right? So I guess the app's doing pretty well. Maybe advertising, maybe, you know, I don't know. Maybe they got their own line of toys. All right, anyway, keep an eye on this area. This $25 area is very important. If it breaks out of that area, it could continue higher. So it's one I am going to keep on my watch list. Now, you guys haven't heard me talk about A-Lab in a while, but the IPO was looking juicy way back here until we had a nice downturn. Now, creating these new higher lows here, we're above a 200-day moving average. And look, the 200-day moving average just showed up. It's starting to get a nice curl to the north side at 5.1 ADR. I think if it breaks out of this basing top right here, this $99 area, so we're going to call it the $100 area. I'm going to be looking for volume on this to come in. If it does, I think this would be absolutely beautiful. A newer IPO stock. That is A-Lab, A-L-A-B. If we look at the overall financials, you can see the EPS and the sales growth is absolutely kicking ass and taking names. That is in the semiconductors as well. So we're gonna go ahead and categorize this with the rest of the semiconductors just so we can keep things a little bit cleaner. Bear with me here. Where is the rest of the semis? There we go. All right. And the last one is GWRE. So this thing really got to cooking. Huge gap up here, now sitting at $263.02. This is a software play. You can see it's got this 5-minute trend breakout strategy on here. Now, usually my 5-minute trend breakout strategy is on the 5-minute time frame on the same day, but I'm just looking at this thing on the hourly. It's all the same setup, folks, and you're seeing it on the hourly. So it's the hourly trend break setup. It's absolutely beautiful. You see it on the daily, but now this is an intraday setup. This thing could definitely yeet skeetily do and go much, much higher very soon. But do keep in mind that these things are moving fast. So I like it. I like a lot of everything that's going on in the overall market. There's a ton of beautiful setups. I know I've only hit like just scratched the surface of these setups. I know you guys have 1,000 more. And if you guys want, do me a favor, throw it in the chat. I know I went over a ton of them, but if you got something out there that you want me to take a look at, just let me know. And also, big shout out to Guy. I really hope that he follows through with this. If not, I think we need to just do it overall. We need to get every subsector that, you know, we can just start with the hot sectors and just gain a humongous list of not just leaders, but just stocks in general. So we can watch the semi, the mid, and the large cap stocks all moving in that sector to see what's going on. So we can have our finger on the pulse a little bit better as well. So we're gonna start that up very, very soon. We can just go over a few of my trades that I'm in right now. Let's talk about Hood. I have been holding my breath on Hood. Now I am still up quite a bit of money on this stock, but in general terms of, you know, position, I'm only up 6.5% on this trade. Now that does sound good. I'm shooting for 20. I want to show you guys exactly what happened to me in the after hours as I was waiting here for Hood to get to ripping, and I've just called. Hey, it's Friday. It's the weekend's here. Well, this thing, oh, let me get rid of this. I don't know what the hell I'm doing here. This thing right here, folks, from where I bought it to where it's at right here, where I have this alert, is my 20% right here. I would be taking my 20% at that $80 or $79.99, okay? This thing gapped up in the after hours and then sold off on that news. Now it's right back into its area of support. I talked earlier about an undercut and a rally. This is a very good sign if it can rally. If it doesn't rally, I'm gonna break even on this trade. And it's gonna hurt. It's gonna hurt because I was up like 5K on this trade at one point, right? And I don't even know how much I was when we hit my 20%. But it hurts, it hurts. I'm watching my account, you know, very volatile. I know I'm not gonna lose any money on this trade unless I get some slippage and it gaps down or something. But watching this thing and taking a big boy size and holding a trade like this and having, the majority of my capital wrapped up in it is a whole different psychology. And I'm really enjoying it because I didn't realize I could deal with the volatility so well, but I'm so confident in my strategy now because I've been so focused so long in it that it's much easier. So, some days I'm up 2,000 or 3,000, some days I'm down 2,000 or 3,000, but I'm enjoying the volatility, and I know that I have the confidence in my trade where if I have to take a stop, I take a stop. But I'm waiting for that 20%, and that's that. RBRK is another beautiful winner that I have been playing, and I actually got to hold through earnings because we took it right here, just 100 shares, nothing big, because this is when the market wasn't looking the hottest before I started sizing up like I did in Hood. And you can see here a nice basing breakout. We can see the volume as the volume came in, took it, and this thing just started to trend much, much higher. Earnings came out, it did some volatility stuff, but it still held the 10-day moving average. So I'm still holding those last half of my shares, the 25 shares, I'm holding my last quarter of these shares. And what I would like to see, just like I seen on AEVA, where I didn't hold on to it because it's just such a small idea, it's just a small amount. This last quarter, if I can hold on to and give it more room, or maybe don't even give it more room, maybe eventually it just keeps gapping up and going higher, I can make this 25 shares. We can still make quite a bit of money on it. So it's no capital to me. It's not risk at all. There's no risk on this. But if it does close below a 10-day moving average, I will happily exit this trade. So we'll see very, very soon. All right, we got a couple of tickers. Let's take a look at Yosef. Says URBN. Yes, this is a nice gap up, pulling back, following the 10-day moving average and getting really, really tight now. So URBN, let's take a look at the financials at first glance. Bam, you can see they have EPS and sales growth. This is an Urban Outfitters and retail trade footwear. Its average volume's over 2 million and its market cap is 6.27 billion. So that's a good sign right there. We know what we're looking at actually makes money. They actually are making money for their investors, and they are having sales, and those sales look like they are increasing. So URBN looks really, really good here. I'd like to see new higher lows on this. So when we see a new lower low after a big spike up here, that doesn't give me the confidence where I'd want to get in, but this is definitely one you want to watch, because if it does make a new higher low and then create a trend or a base and gets tight, then we have a better move higher. So Yosef, yeah, I absolutely like URBN. I'm going to throw this because I don't have a retail. URBN. I don't have a retail on my watch list, so I appreciate that, my brother. Let's see what else we got here. Libby says MDB. Let's take a look at MDB and take a little peeky gander what we got. So big things right off the get, okay? This is technology service and package software. So right off the get, I should already see this thing making new higher highs because it's already in a sector that is making new higher highs. So if it's not leading with the rest of the sector, it's not a good stock. And also, if we zoom out on this, you can see it's not just below a 200-day moving average, but the 200-day moving average is declining. So it's a very, very bad sign for MDB. Now, I do see we have EPS and sales growth, so that's a great sign, but there's something else that's going on, some internal issues that I'm not seeing right here at first glance. So on the technical standpoint of this is not a good stock, and it's definitely not one that I would be interested in. Every time it came up to this 200-day moving average after it's broken below it, it's found it as resistance. See that? So now it's running back up into that 200-day moving average, and that is acting as resistance. So we'll see what happens with MDB, but it's definitely not one that I would want to keep on my watch list. And I hope that helps. I hope it helps. MNTN. Oh, now this is where dreams are made of right here, ladies and gentlemen. Thank you, Beef Stewie, for stepping into the building. Let's take a look at MNTM on the financials here, which I don't think it is. Engages in the provisions of cloud-based marketing automation software. The firm offers advertising and creative software suites. The company was founded by Mark Douglas. Is it the Mark Douglas, the one who wrote the trading book that owns this? Mark Douglas in 2009 and his headquarters in Austin, Texas. I wonder, I gotta check. Does Mark Douglas, the author, own MNTN? Let's see. Yes. Oh no, it says yes, a Mark Douglas. However, this is not the same Mark Douglas who wrote Trading in the Zone. Okay, squashed. This is MNTN, so this looks really, really good. I really like it. I like the story base behind it. Software, cloud, you know, it's got everything that has to do with, you know, the AI and what everybody needs for computing power. So I like this. I'd like to see one more new higher low in this. Obviously, we have this low, we have this new higher low. If we can get one more, that'd be nice. The market doesn't give a shit what I think. It's getting tight here. I can see this thing really get to ripping. So let me put this on my watch list. MNTN. So we got that on there. Let me put this. Yeah, newer IPO too, guys. This thing could really get to working. Wonder what the average volume is on it right now. So the average volume is only 685,000. So do keep an eye on that. That's a much smaller volume than I like to trade. So, ooh, Ollie with a half of year base. We got to go take a look at that. OLLI. I've played Ollie a few times and no, not much reward when I was playing it. But yeah, look at that. Absolutely beautiful. Yeah, I'm seeing from December, yeah, till June. So about a half a year base. That's looking really good. I do believe this is a slower mover, if I remember right. Let's take a look. OLLI, as it only moves 3.7%. Now, of course, things could pick up right here at this basing breakout. So if you're interested in Ollie, definitely take a look at it. If you want to see the financials, right here they are. You can see we are seeing EPS and sales growth. So you at least can sleep comfortably knowing that Ollie's is going to keep on selling. Holding a 200-day moving average as its support. So keep that in mind. One of the best times to buy Ollie has been very well proven right around that 200-day moving average. So that's a great sign. So keep that in mind as well. So this basing breakout might take it to new higher highs as you've seen it did right here. I'll just draw it out for you. Basing breakout worked here. Basing breakout worked here. Will the basing breakout work here as it will be the third leg higher? This is in a stage 2 uptrend. It looks really, really good. I like it. It's just a little bit slower than I would want. You know, I want something a little bit faster. But yes, couldn't agree more. Couldn't agree more. Look at this. Basing, you know, the all-time high was 123.52. You know, and it's just really trying to break because then after that, it's blue sky, baby. So yeah. You know, it makes me like it that much more. The more I zoom out, the more I like it. Because this is kind of a base on top of a base. So if I take this base and I drag this base all the way out, I think that's probably what you're looking at, Yosef. You're seeing this huge base here. It broke above its base and then came down, retested its base and said, yes, I agree. I like this base. Now it's another base on top of base. And if it breaks out of this area, yeah, brother, okay, you got me. Let me add this. A little bit slower than I like, but I really like the technicals on this. And if we see the volume come in, I think you're going to see some big money coming into this. So keep an eye on that. Thank you, Yosef. Well, I hope you guys enjoyed yourself tonight. It's a little after 10. Hope you get a good night's rest. Make sure you are rested for tomorrow. I think it's going to be a big day, a big week. CPI, initial jobless claims, lots of arguing between the Uncle Tesla, the Elon Musks, and the orange one. So we'll see what that all brings. But I do hope everybody's safe. I hope everybody really just learns how to cope with the emotion of trading. Just find a way to not be emotional in trading. Because I'm telling you, I've been having huge breakthroughs by just not being emotional. There's been plenty of times, especially 3 months ago when we were down, just barely getting above a 21-day moving average, things weren't looking good. My trading's stagnant. It went sideways. Now the P&L is a nice curve up just with the rest of the market. We got to wait for the right times, and that's exactly what we're doing. So find a way to not to be emotional, cancel the noise out, and use risk management. I hope you guys have an awesome night. I love you. We will see you on Wednesday. Peace. I've been so damn busy. So busy, but I tell you what, it's always nice to have a recap on Sunday. I learned so much just going over all of this and getting the update. I hope you guys get plenty out of it too. I see you guys smashing the love. I give it right back. You guys are awesome. Thank you guys so much. Beef Stewie, thank you for moderating. Thank you for being here. Jolene, always good having you. Jimmy Bright, thank you for being here, brother. Yosef, thank you for your input. Torqued, it's always good to have your input too, brother. Libby Friendchuck, thank you so much for being here with us tonight. Got a couple more in here too. Loke Dr. Fell, thank you so much for being here. Mama was here. She came, she saw. Norman Conklin, thank you for being here. Do appreciate you being a member of this community. Big shout out to you. Zamora, hope you made it to the end. And you know, I'll be honest with you, I'm pissed. Swolesburg, you're asking all these questions before the show. Swolesburg, yeah, I'm calling your ass out, Swolesburg. You're going to ask all these questions, you know, you're going to ask me all these damn questions, but you're not going to show up for the live show. I even went over the basing breakout on the 5-minute trend. Oh, you're killing me, Smalls. Show up, do the homework, learn, regurgitate, enjoy. Hope you guys have an awesome night.